Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Monday night, November 14th, 2022. Here's our professional footprints and some reference links for further investigation. As always, we'll be talking about some sniper trading here tonight, where we are looking at a combination of trade location on multiple look-back periods and short-term price volatility on 1-day and 5-day measures to find those compound critical states that lead to surprisingly large moves unless you're prepared for them. And that's what we are in constant hunt for. So today's sniper trade of the day is in Cliff Natural Resources. And so I want you to notice that here was yesterday's close, the big gap down, and then a morning hook. And it moved that distance off the bottom. And when it finally crossed the dragon, I just hung a standard minimum manageable risk box on it and entered here when it had cleared this resistance. It rolled up almost a full hour in hand. I gave it as much room as I could to still preserve the no lose plus dinner for two, and decided I just like to get paid first thing in the morning, even if it's just covered in coffee. And so that was our first trade. Notice the PSAR flip. This could have been a short. You would have put your risk box here. This should not have, if you did take that short, this should not have lost money. Or if you took this as the stop and reverse, you would have lost a fraction of a risk box. In other words, you'd have given back the gain that you made here. I had a long side bias because I was treating this as a Kata 2. I wanted to see where it would pick up support, cross the baby dragon, entered the dragon, crossed the dragon, takes out the PSAR. So I take a standard entry with that same standard risk box. And my job is to get my stop to no lose plus dinner for two as soon as I can, so that I can lock in this gain. Now, on that first bar that we entered, and then it gapped up and then closed here, by the time price is already here, I'm not offended if you decided to quickly move your stop. If you decided to move your stop right away to like the 1 bar low. And that way you have about 3 minutes of open risk. And now, if you do that, you've locked in a gain. And see what that does to your psychology sometime, when you can quickly get your risk out and make bank on that little piece, that no lose plus dinner for two. And now that you're turning this into a science project with a disinterested frame of mind to just wonder what your exit rules will get you above and beyond your initial risk. Now that your risk is out and you've made some money on this trade, see what that does to your psychology. It's kind of droning along here, but now we get a Kata 2. A second one where we have these observable rising lows. This is the key indicator here, that previous RL10 peak. When that breaks, you're entitled to think of that as the emerging dragon. And notice that your PSAR never flipped, because it takes the RL10 to cross the PSAR to cause it to flip, but it never did. And so this resumption, that higher low, is double plus good. You're entitled to think about adding a second position right in here if you wish. You could actually think about that, because by this time you have a 1R in hand and you've got some momentum. Now, it's nothing wrong with waiting for 2R in hand, but if you decide to do that, then if you were tracking the PSAR as your stop all the way up, by this time, as soon as you could get your second position to no lose plus dinner for 2, that's even better, because now you're not going to lose money on the second position, plus you have all of the gains from the first position psychologically enhanced. So that's a good position to be in. Now, with this little give back here where it just made a new low, I like having a stop at the edge of the dragon, or the spine of the dragon, or the belly of the dragon, or the PSAR itself. Any one of those is a reasonable place. A lot of the choice about where to place that, you could be looking at the market and the sector, just taking a look at the dollar value of money in hand. How much do you have, and how much do you want to preserve? How much do you want to give back from the peak? But any one of those positions is justifiable. Because I only have the one position on, I'm happy with just using the PSAR. If I'd put the second position on in here, then I'd probably want to tighten it up to this so that I could be at no lose on that one as well. So how you decide to manage the trade is going to influence that decision. I took the PSAR, and we made 1R on that trade. So there's 1 unit of risk, 1 unit of reward. So we're at +1, and this is probably 0.2. So we're probably at +1.2 so far. Check or hold. Now I'm noticing once again that we have a kata 2 here, because we still have the higher low. Now, legitimately, you could say, hey, that's not a kata 2 because the previous low was higher, and then that would make this an SSC, and I would agree with you. That's a supported spring crossing, because you have that harsh sell-off, found support, crossed the dragon, flipped the PSAR, but I will also notice that you've got some pretty clear support. The overall trend of this thing is up. And then, oh, by the way, Alcoa, U.S. Steel, Nucor were all better than the S&P. Like, this was the strongest sector today, was in the metals. And so this is I was not very eager to get on the short side of this, although that's a legitimate short side signal. And you wouldn't lose money on that. But my bias was to the upside because of market sector price action right now. So let's call this one an SSC. There's that standard risk box. It gets interesting once it gets above the RL10. So this entire space in here we would just think of as the tactical trade space. And then in the tactical trade space, the only thing I'm worried about is getting my stop above my entry, once again, so that I can lock in this little wedge of gains. It gets interesting after it clears that previous statistical high. Okay. And this one failed right away. So it didn't do anything. When this works, it's supposed to go right away. It didn't. So 1, 2, and crossing the dragon, I'm out. with half an hour loss. Then I noticed the PSAR flips again shortly thereafter, and although the strength feels like it's diminishing, there is still a bit of residual strength in here. So I just take the Kata 2 with a standard risk box, and the previous frame still applies, that it has to get above this price level to be interesting. And this is still all just tactical trade space. Check or hold. It doesn't. So now this is starting to feel like there's not so much going to be available today, because you had highs, lower highs. Now this is almost forming like a little triangle. So whatever comes out of this should be interesting. Notice that this little risk box right here, this zone of uncertainty, is the same size as your MMRB. So you would not be wrong if you just wanted to put a little box in here and say, there's my 1 hour breakout box, let me see it, and ready to take it in either direction. You could do that. I took the Kata 2, the re-entry once again, because all the rules are still in place. Higher lows. It did not fail. It did not fail. Instead, it resumed, and there's your PSAR flip. So there's my long position. There's the standard risk box. Check or hold. Now this feels really good now, because we are now above the previous intraday peak. So this now feels like it's free and clear and off it wants to go. So this actually feels pretty good. Really good. Somewhere in here, that's +1. So somewhere about here, +2. Somewhere in here, I could legally start thinking about, a second position. Well, it wouldn't be wrong to do it now. If I were to do that, now, like if I didn't have this position on and I decided I was going to get long here and I put a standard risk box on it, my risk would, my execution risk would be there for the MMRB. But because I have a second position on and I've got 2R in hand, I don't feel like I want to have two positions move a full 1R against me and then take a 2R win and then have it fail and scratch out altogether. So in these conditions, if I'm going to put that second position on right here, I'll still draw the standard risk box, but then I will most likely move that stop up to like a 2-bar low, so that if this does not go, but instead starts to fail immediately, I'll just get out right here. I'll take a 0.3 loss on that one, and then this one will be 1.7 because this was 2R, and now I've given back 0.3. So the minus 0.3 and 1.7 would net me out to about 1.4, which means that I would have given up about 0.6 for the opportunity to put the second position on. On the other hand, if this thing does work in my favor, it only has to go up 0.3 on two positions, and that equals 0.6. So it's really, as soon as I put that second position on, it's either got to go 0.3 in my favor or 0.3 against me for the smoke to clear and everything to be, my next decisions to be manifest. So I did not put a second position on. Now I'm ready to get out of this thing almost like right now, because um, it had a really nice uninterrupted run up. It peaked. It ended in this little doji with a lower high, and then the 2 bar low broke, and now it closed down in here. It's already in the middle of the dragon. I'm not offended if you just take that exit right there, or if you took the 2 bar low and exited right there. I feel like if you wait for the PSAR on this one, chances are you will regret losing that much as opposed to keeping this much. If you let that come all the way back to the PSAR, and this is for you to decide, by the way, check your own feelings. If you had maxed out up here and then you let that roll all the way back to here and you kept half, what are your feelings? If you're okay with that, then you're okay with just a trailing PSAR, which is fine. Now, the way we resolve that is on a nice move like this that gets past 2R, you could say, I'm going to exit now with the sniper with 1/2 the position, and then I'll take the other half of the position and just manage it conservatively with the PSAR. Then if this thing does fail and we get out here, then we actually get the average exit, which would be there, which is a nice trade-off. And then by going half and half, you have completely eliminated the cognitive effort of trying to struggle with this routine decision about when to let it run and when to cash a win. I had one position on. I just took the managerial exit and was content with this PSAR exit for about 1.5. So 1.5. Okay. Another COTA 2 entry. You've got all of these rising lows, successful trades to the long side. So there's our entry. There's our standard risk box. Check or hold. Oops. And it does a quick scratch, micro loss, and that took us right into the close for the day. It was after 3 o'clock, and that was enough. So altogether, about 4R for the day with Cliff. I was pretty happy about that one. Quick look at our market recaps now. This is the 30-minute. So that makes this a 5-day look back. There's your 5-day low and your 5-day high. This is your 10-day look back. Here's your 10-day low and your 10-day high. So this still feels like it's working. And today was generally a reasonable upside kind of day. But in the last half an hour closed poorly, so it was down minus 0.8. But except for that last half hour, which gives you this box, it was holding and preserving, and then there was some capital preservation, I think. On the failure to follow through, I think there were folks willing to exit the positions that they had made some nice money on the long side here over the last 1, 2, 3 days. And that looks to me like guys unwinding some leveraged positions going into the close on a day where it really could not push any higher, could not push higher above 400. couldn't get to the next key price level of 404, for example. So that looks like preservation. Now, what that also tells me is that this thing is ripe for further failing all the way down to here, 390 and 387. And if 387 cracks, that gap gets filled pretty quick, and we'll be back at 374 in a heartbeat. So that's the worry on the downside. On the upside, it has to get above 400, and then it has to clear 404 really before we feel a little more relaxed on this one. Okay. Widening our aperture a little bit to the daily bars. Today was just kind of a little gap down, momentary push, and then a weak close. There's your 2-bar low, 3-bar low, edge of the dragon, spine, belly of the dragon, the R10 bottom, and there's your PSAR flip. So I see this as the tactical space. You can adopt the short here at 388, second position at 374, because if that fails, then your next support level is way back over here around 358. And then we're just going to remember when we look at the longer term, the 150-day look back. You know, this is now our 30-day box. We've had a nice, double bottom and a kata 2 and a nice second leg up. So there's leg 1, there's leg 2, but it's starting to roll over and closed at 395. So you can see that this move back to 374 would be a give back of the second leg. And then if 374 collapses, it's the second leg down, and then that's problematic. So bear normal. This is typical behavior of bear normal conditions. Just when we're going to see Walmart here in a minute on the daily report. So this is the intraday 3 minutes on Walmart. So there was selling pressure all day, then a consolidation, and then at the last minute, that just collapsed. And this is really problematic in Walmart. That price level, when you look at, so that's the 3 minute. When you go back out and look at the hourly charts on Walmart, you're going to now see that this price level here has been tested, 5 times in the last couple weeks. And most of the time it's rebounded nicely. But this was a harsh sell. So, yeah, if that holds and bounces, you could see it getting back to 143. But there was something about that last minute selling that if that fails, then this is the first sign of support way over here at 134, which is about a 3.5 or 4% move. And if that fails, you're way back here. So Walmart had been a source of strength, but this little question mark right here is really problematic. What's up with that? That's one to watch early tomorrow. Oversold, getting ready to dip into the winter on the MACD. That's a problem. All right, let's take a look at performance of the sectors. All righty, let's start with, as always, our S&P. Because of that weak last half hour at minus 0.85, strength was in emerging markets and diamonds, down 0.6. And treasuries were the strongest index at minus 0.25. Tech was a underperformer, minus 0.88. And the Russell was the weakest one at minus 1.11. Not much difference in the stock indexes, but they all suffered from that last-minute sell-off, which was harsh. So this is a market that's still waiting with bated breath. Yeah, the election's over, but What's the next thing that's going to start giving some directionality now that that's off the table? I don't know. All right, let's look at the underperformers because this is where we could see the weakness starting tomorrow. First, S&P baseline at 0.85. So, tech, the two lumbers at -1. Uranium, finance, oil exploration minus 1.46. Blended commodities, S&P discretionary, clean energy down to 1.6. Commercial real estate minus 2.22. Commercial real estate, or residential real estate, I should say, 2.3. Lithium, oil, ARC Genomics, and ARC Innovation, 2.6 to 3.6. And then trouble in financial services and disruptors, Coinbase and Robinhood, minus 7.4 and minus 8.9. Squarespace and PayPal also weak, but not quite that bad at minus 1.7 and 1.9. Microsoft was a real disappointment at minus 2.25. That's where you were hoping to see tech finding some strength, but man, it got smashed today. Rivian was weak at 1.5. Texas Instruments in the semis minus 1.25. Apple was no help to the S&P at minus 1%. So lots of disappointment, a widespread weakness all around. To the upside. Again, the S&P are baseline at 0.85. The sectors that were better, biotech, staples, and wheat and precious metals only down 0.63. Materials, FANGs, Mexico, and agriculture between 0.14 and 0.05. And this was the cut line between actual winners and losers. So the VIX was flat, Aussie dollar up a fraction, Bitcoin, Ethereum, Brazil, and marijuana, marginal winners, 0.16 to 0.78. And now the sector of the day, Cliff Natural Resources, U.S. Steel, and Alcoa, all going up together, which made it easier to stick with Cliff today. 3%, 1.5%, and 1.17. NVIDIA in the chip space was the best at minus 0.2. Intel not far behind, minus 2.6. Texas Instruments was, again, below the watermark. And then Devon Energy almost flat at minus 0.42. Okay. Now let's check and see how the team did today. All right, so Agnieszka, whoops, I'm sorry, with the pound Aussie pair. Let's see, let's scroll up a little bit here. So she shorts the collapsing dragon here. I like that one. Gives it a little bit of room for minus 0.2. It does not follow through to the upside, so her attempt to go long quickly stops and reverses. She puts the second position on, gets a quick scratch on that one, shorts quick scratch for half and half, and then keeps firing, gets the second re-entry short for 2.7. So she crushes this one for 2.4 and this one for 2.7. So plus 5.1 by continuing to fire, and that's 3.6 for the day. So very well done in a short window of time. Tim, let's see here. So this is Alcoa on the threes. This had that same gap down that Cliff did, although it had a harsher sell-off and then a really nice rebound all the way back to the VWAP. So in my view, that's tradable as a morning hook. A WMB3 would get you in right around here and allow you to participate in that move. This would have been a COTA 2 if you'd have been available for the trade. He was available starting here. A quick loss gets paid for minus 0.6. This would have still been a COTA 2 grinder to the upside if you were in the market. He had work duties. Apple, also some early volatility. The gap down and sell off was certainly tradable. The 1, 2, 3 in WMB was tradable. This one, when this doesn't work right away, I would just as soon get out like right here when it crosses the VWAP and just be done with it, because then you don't have to suffer through all this. This is supposed to work right away. If it doesn't, get out. The re-entry, quick scratch. Now, if you keep firing by the patterns, COTA 2s are working all the way up. He wasn't available in the market, but those would be the patterns you want to look for. You can start correlating that with the time of day to see if you want to be trading at different times in the day. He is able to turn the day around, though, with Tesla, bringing in 1.4 on Tesla with getting paid, getting paid, getting paid. Oh, no, I'm sorry. He would have gotten paid here. But he got paid enough for 1.4 to make it a positive day. Good shooting. Yeah, I want you to take a look at that WMB3. When you have these exaggerated sell-offs and then the VWAP starts turning, there's room to make that trade. Opportunity trading in the morning. Here's Nolan. He's got the XRP tethered to the US. PSAR flip, this time he crushes it. Very nice. This would have been tempting, and then if you'd taken that scratch does you no harm. So that's 1.8, nicely done. A couple quick scratches, then the reversal, keeps firing, gets paid. Quick loss, that's the one that got away. On this one, when you get that massive gain and then it gaps back up and starts moving, you'd want to be short somewhere in here and then cash right about there. That's a great re-entry on the collapsing dragon. Gets paid. Quick scratch, and gets paid for 1.8 for the day. Nice work. It's starting to feel a little more natural, it feels like. And then in the Tesla, yeah, there's that OR3. Now, 1, 2, 3 entry or the WMB3, which will give you functionally the same thing. You want to search for those videos because there's your harsh oversold. There's the MACD improvement, and then there is your uptick on the candle. You 1, 2, 3 entries right there, and then you get that trade. But you get paid for 0.8, and we'll take that. All right, Luke with the 5-minute Aussie. Somewhere in here there was an opportunity on the collapsing dragon. The PSAR flip was a little slow. So instead of a scratch, we might have gotten a micro, which would have made the difference in the day. I'm looking at this to think on the you have a lower high, RLXD, PSAR flip, standard risk box. Maybe we can get this. especially when you see that. By that time, you can lock in that piece. Um, I like that as an SSC, quick loss, and then I think that should be a stop and reverse instead of waiting here. And then when we get that far down, I'd like to see you get out here rather than there because we gave it a second shot. And in both cases, we were an R in hand and gave back to here. So, but that's a good reversal. Good second position. I think we stuck around too long. Great reentry. But then on this one, the 2-bar low. Let's get paid. And then this just feels late. Maybe at the RLXD or the PSAR flip. And now I feel like you're chasing. And that should be a stop and reverse. And then this should get this much gain should get you paid. Don't give all of that back. And then on this break, that's a pretty good entry. I would, by this time of day, I'd like to see you just get out, get paid quicker, because this feels like too much angst. I'd be a little quicker on the trigger. Feels like you're kind of in the grind, and I think you need a refresher. Just a little bit, have some fun. You need to bring a little light and spirit into you. Feels like you got the working man's blues right now. So get over that. This is a nice capture. This could be the stop and reverse. Good capture, better stop and reverse. I think we gave back too much on that, but that should be your stop and reverse rather than here because we missed that entire move right there. Still, we'll take 6.5 for the day. The little grinders really add up. Daily reports next. Just a reminder, bearish normal. Had a lack of follow through to the upside, so the recent strength has started to decay a little bit. We're reminded that we're at a critical state for volatility, and so we can see those sudden sharp moves in either direction now that we're out of the elections. And now the warnings about dead cat bounces are starting to emerge. Had some strength in energy and Pfizer and the Dow, but Tesla, Alcoa, and Walmart especially. Watch Walmart tomorrow. Be ready for Walmart. My spider sense is tingling. Yeah, there's Walmart. One of the minus 3% today. On the other hand, IBM was a breakout. Pfizer was a breakout. I like both of those, especially Pfizer. Go take a look at Pfizer. It doesn't know it's in a bear market. You got Disney at 4.8 to 1, Tesla 4.4 to 1, United Health 2.1. That's, Tesla just down 45%, just getting smashed. Don't bet against Elon. Unlike the crypto guys, he actually makes something of value. So gold was a breakout, silver was a breakout. Otherwise, just kind of marking time today, waiting for the leaders to step up and start moving it directionally. That's why I'm a little nervous that when the lack of buying pressure in a bear is usually a hint to the bears that the bulls don't have any conviction and they start sharpening their claws. I'm a little concerned about that. You got a couple in the auto framer, Disney, Tesla, Brazil. Microsoft and the S&P are both squeezes. In the Godzillas, you have a few in the S&P have snuck in. Two Godzillas that made big moves today. And then Ethereum and Bitcoin as Godzillas on the tactical symbols. Oops. Some big movers in here, better than 2-1. Eli Lilly really stands out for me. And as always, I'm looking for the double greens on the volatiles, those things that are just enraged and moving regardless of location. Find the movers. That's how you find them, double green. Standard stats. This was the one that made me look at Walmart specifically and why I'm really attracted to that, like a hyena to a carcass. Sniffing weakness. But meanwhile, Pfizer, Cliff, U.S. Steel, and IBM, what's not to love? And then, to me, Mexico, energy, materials, all looking pretty strong. All right, that's everything we got for today. We'll get this published and posted. And I posted yesterday morning's Creativity 202 session. That's a pretty fair sample of the work that we've been doing on the record in the Creativity 202 workshop. There's so much goodness in there that the home study course, self-paced, I think is a steal. Even you don't have to commit to doing those true story circles, and you can self-pace it. But boy, I think that's just a resource that you're going to want, and I would do it sooner rather than later while it's on sale. All right, take good care, and we shall see you tomorrow. Yeah, the sale price on the home study for Creativity is $1,000. Normally $3,000. So that's my Christmas. That's going to be in force to the end of the year.